Bismillah ar-Rahman ar-Rahim. Good afternoon, ladies and gentlemen. A very warm welcome to all of you in this Fintech, Regtech, and e-supervision in KSA webinar. My name is Mansoor Usmani. I am the Director Learning and Development at Carlyle Square Consultancy Limited. I have been engaged in learning and development in KSA for last 25 years. I will be moderating this webinar. We thank Financial Academy for their encouragement and support in organizing today's webinar. Carlyle Square Consultancy, or CSCL, was established in UK and Bahrain to provide end-to-end solutions for risk, finance, business strategic consultancy, fintech solutions, and training and development. Today's session will be roughly 45 minutes with an active, lively Q&A at the end. During the session, please type your questions in the chat box on your screen. We will attempt to respond to all of your questions. Please allow me to introduce today's presenters. Most of you already know Mr. Tariq Javed. He is the CEO of CSCL. He is an ex-central banker and regulator who is well known and well respected in the kingdom with over 33 years of experience, including implementation of Basel I, II, and III in KSA. His major contributions have been in the development of national policies, laws, regulations, and reforms related to the financial and banking sectors. Tariq will be providing a brief overview of the Fintech, Regtech, e-supervision, and practical applications in the Saudi financial sector. He will be participating in Q&A to provide Saudi Arabian regulatory perspective. Our speaker on the topic is Mr. Zeyn Adam. He is the CEO of RISKCAPCOM with over 20 years experience in compliance and regulatory development. Zeyn was part of a team where he developed a formula on risk-weighted assets, which is part of Basel II Accord. He has also worked with the US Federal Reserve, UK PRA, and the South African and Russian central banks. He designed and developed automated RWA calculation engine, winning Silent Technology Global Award. He has pioneered the development of Regtech, Suptech, ICAP, ILAP tools used in several countries. Our second speaker is Mr. Alexey Lobanov. He is working as head of banking regulation department at the Central Bank of Russia. He is in charge of implementing the Basel standards for Russian banks, including Pillar 2 ICAP requirements. He has been working at the Bank of Russia since 2012, and he is a member of Basel Committee Working Group, including the Market Risk Group, which is responsible for the development of fundamental review of the trading book regulations, and the Policy Development Group, which is responsible for all regulatory standards of bank capital, liquidity, and risk. And now over to you, Tariq. Tariq?
You're on mute.
Yeah. Please go ahead, Tariq.
Oh, yeah. Thank you. I was on the mute. Thank you, Mansoor. Thank you, all of you, for joining us. I know there are many dear friends. I should say good afternoon in Riyadh. although it's early morning in Toronto where I am today. It is a pleasure for me as the chairman of Carlyle Square Consultancy to welcome you all to our second webinar in collaboration with the Financial Academy of Saudi Arabia. Some of you may recall that 2 months ago, we had a very successful webinar on COVID-19 and its implications for the Saudi financial sector. As you are fully aware that Fintech, Regtech have been very important for development of our financial sector, and now after COVID-19, they have become even more relevant and important as we have recognized how much can be done from home and online. Currently, this subject also has a high profile as it has been put forward as a priority agenda item at G20 Heads of States meeting that will take place in November, inshallah, this year in Riyadh. Today's webinar will briefly cover Fintech, but would largely deal with Regtech and e-supervision. Now, the terminology Fintech and Regtech and e-supervision seems like very modern and new, but the reality is that every time over the past decades, when banks have invested in technology to improve customer service and meeting regulatory compliance, then they have been engaged in Fintech and Regtech without calling it such. Banks, of course, have adopted new technologies and found new ways of serving their customers and became leaders in competition for growth and for a higher share of the market. Many banks and FIs have invested very heavily in technologies to serve their customers more efficiently. As a result, tremendous strides have been made in customer service through digital technologies that allow for faster access to their accounts, bill payment facilities, transfer of funds, making investments, and buying and selling shares and other financial instruments. I'm sure, like me, many of you don't even visit your bank account anymore, bank branches anymore. That's the reality. However, in the last decade, riding on the wave of new technologies, many innovators and challenger firms have entered the arena and are taking many products and services away from the traditional suppliers. This wave, which started about 10 years ago with much hype about the threats from cryptocurrencies and blockchain technologies, has now moved on and been replaced by providers of electronic payment services, and companies such as PayPal and STC Pay have taken a major share of the market from traditional players. Similarly, there is an increasing array of services related to mobile phone technologies and credit card-based solutions that allow customers to access a variety of products and services from the market. Of course, many of these fintech products are based on e-payment solutions that are increasingly provided by the non-banks. I can see this trend to have major implications for the entire financial sector in the next decade. Turning now to Regtech, this also has been an area for continuous development over many decades. Whenever central banks and regulators issue new laws and regulations, there is a race by technology firms to come up with technology solutions. The pace of change in this field has escalated after every global financial and other crisis. For example, there was a significant development in the field of anti-money laundering and combating financing of terrorism after the September 11 event. Similarly, sanctions technology has become very important following the huge penalties imposed by the regulators for a violation of sanctions. Also, following the 2008 financial crisis, international standard setters such as Basel Committee, IOSCO, and International Association of Insurance Supervisors has come up with new standards for capital, liquidity, leverage, and various other risks. In the past few years, we have seen rules such as FATCA, IFRS 9, trade repositories. They are all driven by new regulations issued by local and international regulators. This has resulted in an explosion of RegTech solutions that are developed to help the industry to meet the new standards. It is interesting to note that in the RegTech space, we see large technology firms such as the IBMs, the Oracles, and SAPs have to now vigorously compete with small specialty firms. Often the tools by these innovator firms are better, less expensive, and more efficient. Finally, I would like to touch upon e-supervision, which has been an important challenge for most supervisors, and despite much attention to it, e-supervision is still far from reaching a mature stage. Many regulators around the world are currently developing their e-supervision strategies to take advantage of the new technologies for enhancing their capabilities and to make more efficient use of their supervisory resources. As a regulator for 33 years in SAMA, I know what a regulator wants, and this is very clear and simple. What the regulator wants is a system that can draw information from regulatory returns and automatically present a dashboard information related to key trends, key regulatory ratios, information on non-compliance, high-risk portfolios and transactions, analyzed by sectors and geographical locations, and so on. All such information using data analytics and artificial intelligence should result in an automatic update of the risk profile of a bank or a financial institution and also the banking system. This would make it easy for the regulator to set target capital and liquidity limits for each bank and financial institution, and also make it somewhat easier for the regulators to issue fines and penalties for non-compliance. While much progress has been made in this area, but much still remains to be done. Today, you will see one example of a RegTech solution that attempts to meet both the needs of the banks and the regulators. The tool, which tracks compliance with local laws and regulations, can be used by the financial institutions to do a self-assessment of their compliance. This also enables the regulators to quickly identify any major gaps or weaknesses in compliance, documents that are submitted to it by the FIs. Before I conclude, I wish to acknowledge the very significant contribution to the area of FinTech, RegTech, and e-supervision made by three excellent gentlemen from SAMA. When I started in 1986, Governor Hamad Al-Sayyari was in charge. He, with the late Jammaz Al-Suhaimi, who was the deputy governor, and Taha Al-Gawez are the architects of the FinTech and RegTech in Saudi Arabia. SAMA's leadership role over the last 4 decades to create a technologically advanced and sophisticated banking system continues. SAMA has encouraged banks to invest heavily in FinTech and RegTech solutions for better serving their customers, being more efficient, and management of risks. To promote further innovation, SAMA has established a sandbox for innovation and experimentation. I know in recent days, SAMA has licensed 9 companies out of the sandbox, and this, to me, is a very, very important development and a great policy in line with Vision 2030. To conclude, the webinar today will talk about global trends in RegTech and e-supervision, and it will identify initiatives at both the national and international levels. The webinar will also provide you with views of some international experts and central bankers on these topics. I hope that the 1 hour you'll be spending with us today provides you with useful information for you and for your institutions. And in the end, I wish to thank all of you very much for being with us, and I look forward to the Q&A session. Thank you, and Mansoor, we can pass it on to Zeyn.
So, thank you very much for that introduction, Mansoor, and for your insightful words into the webinar from Tariq. I appreciate that. Let us begin the presentation or the webinar with the following quotation. This was released by Mark Carney, who was the governor up until March 2020 of the Bank of England. What's interesting about this quotation is the size of the fines that have been placed on banks from 2008 till 2017 when he made this quotation, which equated to $350 billion globally that regulators have placed on financial institutions for non-compliance improprieties. What's important about that, and what people don't realize about that, is that for every dollar that a financial institution pays in a penalty, the economy of that country is suffering 12.5 times more in terms of risk-weighted asset in comparison to the dollar paid by the bank. So essentially across the world, because of that $350 billion worth of fines, it ended up being $4.3 trillion in lending or lending to households or businesses across the world. What's interesting about that, to give you some idea, if you look at the GDP of Saudi Arabia for 2017, just for an interest, it was $181 billion. So you can understand the depth and, if you want to say, the seriousness with regards to fines and what that prejudices the financial industry, and not only that, but the economy in which it's operating. What's also of interest on this slide is Mark Carney made this observation halfway through his tenure at the Bank of England. And this is, you can say, since the 2008 crisis, it's almost 10 years on, which shows that the situation is not improving as much as it should with regards to banks being compliant. That's mainly because of the fact that the bank right now, because of the size of regulation, is finding it very hard to keep up with compliance. Okay? Deregulation is not the answer, by the way. As you can see, deregulation, in some cases, especially in the US with the Glass-Steagall Act, has led to what you see as the contagion of the financial crisis happening in securitization in 2008 and liquidity crisis. On from there, to explain to you a little bit about what is technology in terms of SupTech and Regtech, or supervisory technology and regulatory technology. Supervisory technology is technology that helps a central bank to implement regulations. Very importantly, it helps to implement regulations, and it helps to the central bank to also administer, review, and assess banks using that technology. That's what SupTech is. Regtech, on the other hand, is what is used by banks in order to achieve compliance in their local jurisdictions against the regulations that the supervisor is putting out. So any system that you buy should include some reference value to the regulations that are inside your industry. It's very important because that is how you see the direct linkage of compliance to the local regulations. A lot of banks are taking old old operational risk management platforms sold by vendors in the past, by some of the big vendors mentioned earlier on by Mr. Javed. And those platforms are actually operational risk management platforms which are capturing compliance breaches, which are then turning the system into, according to that bank, some sort of compliance management system. That's actually not true. It's an operational risk loss capture database, and just by chance, it's being used for compliance monitoring on a very limited basis. Another area is quantitative models. A lot of banks you go into will tell you that they have a risk management system. When you look at their risk management system, it's basically a model engine, a risk engine, which is providing them with credit risk estimates, market risk estimates, operational risk estimates. When I mean that, I mean exposure values, and they tout those as being risk management systems. Again, those are not risk management systems, they are just models. Any effective Regtech system or any effective SupTech system for that matter must have a direct linkage and specific reference to regulations. That's how you are able as the bank and as a central bank to help each other to square off in terms of compliance. If you look at some industries, a lot of the progressive industries in the world today, spreadsheets which were used for calculations or spreadsheets which were used for coordination and management of compliance are no longer legal or valid because of the fact that data can be changed on a spreadsheet. You can't track the auditability of it. You don't know who's logged in. You don't know what data's changed. These spreadsheets are no longer valid or in some cases legal in certain countries. Manual compliance, because of the amount of regulation that is in place and the amount of regulation you'll see later on that's coming out, it's just not humanly possible for a human or a compliance department to coordinate and to implement regulations as they come out. And this is one of the areas. And as I mentioned to you before, Regtech is now being mandated or being recommended by certain supervisors throughout the world. You'll find progressive supervisors are already mandating the constituent banks to have Regtech be implemented. So before you start buying supervisory technology or Regtech technology, what you need to do is you need to build a supervision strategy. I can tell you from my experience that central banks and banks across the world spend millions of dollars with consultants in developing e-supervision strategies. I know that they do that in the US. I know they've done that in the UK, Australia, Russia. I'm sure that they will do it if they are not doing it already in Saudi Arabia as well. What is an e-supervision strategy? It's not actually your decision to purchase a technology platform. No, it's the framework which will lead to you identifying this regulatory or the supervisory technology that you want. Okay. What is very interesting about it is that that framework should include the governance, which includes now being able to measure compliance and a metric of compliance within either the central bank or the commercial bank. This was not able to be done up until recently, and I will explain to you why on the very last slide of this presentation, where I'll show you manifestly how you can now measure that compliance in a key metric, and I'll show that to you. So governance is very important. Policies and procedures. What does this mean? It doesn't mean the policies and procedures of compliance. What it means is that every policy and procedure in a supervisory role, in other words, from coming out of a central bank through to every policy and procedure coming out of a bank, should now pass through an assessment of compliance. In other words, through the regulation check. Okay. And now, as I said to you before about risk appetite, now what you should be able to do is match all your policies and procedures in a metric that comes out through your risk appetite, where you as the board of the central bank of SAMA rather, or you as a board of a commercial bank, looks at a key metric which never used to be on your risk appetite, which is compliant risk. Risk assessments. This also means that now compliance, just like credit risk, operational risk, market risk, has its own process of identifying compliance risk. And how is that done? It's, as I said to you on the last slide, it's about drawing regulations into your system, being able to correlate the regulation with the compliance process that you are doing. And from that finding the gaps that are in the procedure, the compliance gaps that are in the procedure. Monitoring in the past was done on a reactive basis. As I talked to you about the operational risk management systems that are being jerry-rigged for compliance. Now what you want is you want a active or proactive compliance monitoring system. It's very important that you are not reacting to compliance breaches, but you are heading them off at the pass, so to speak. And not only that, you want inside that system some way of understanding how to control and fix the issues. Data compilation and reporting, I would say, is actually the key to any system that you buy. What do I mean by that? I mean, what you found in the past is that a lot of banks have been looking at quantitative data only when it comes to regulatory compliance. It's not. 99% of all fines given to banks in the world come from poor compliance procedural breaches. I say that again, 99% of all fines or capital add-ons in the world today come from poor compliance procedures that lead up to data being created, which is used in quantitative models. So you should understand that your system should be able to look at your frameworks, your policies and procedures, and identify what is wrong with them. Tracking and investigation. It's more important for tracking and investigation than ever before, because the tracking and investigation that your system will give you will allow you to identify where the problem actually came from. In other words, a detailed analysis of compliance. Furthermore, where you resolve that issue is even more important. You want to be able to archive how you resolve that issue, not only for yourself, not only for your senior management, but also for the supervisor, and vice versa. The supervisors want to be able to track and resolve a problem as it comes, as it's recognized. Training and awareness. Any system you buy should have some component of it that helps a bank or a supervisor be able to train and to build a compliance culture in its organization. Last but not least, consistency of regulation and coordination. As you are going through the journey of building your compliance, whether it be you as the central bank talking to a bank or a bank building its compliance framework, what you will see, and what's very important, is regulation is how you go through that journey and how that journey is complete in terms of coming up with compliance. As I mentioned to you before, there are more regulations coming out now than ever before. They are changing, they are linked together, and therefore I don't understand how a bank would be able to do compliance without a Regtech system, or I don't understand how a central bank would be able to supervise a financial industry without using a supervisory tool. So the world central banks, the major ones, with the G20 came up with some, if I want, superlative gaps that it found in its constituent markets. And there's 8 of them, and we'll speak about them right now. The first was that governance in banks in general were not in direct control of the bank. Governance was poor, boards were not informed of compliance issues, etc. The second was qualitative risks. Qualitative risks, to give you an example of one right now, is COVID-19. That's not a financial risk. It's not a quantitative risk. It was a qualitative risk that in fact wasn't managed up until now. If you look at legal risk, if you look at strategic risk, if you look at business risk, these are all risks that actually turn out to be more impactful to the bank than any other risk type. So qualitative risks were not well managed or even recognized. Compliance functions were usually just one department, and that department handled all compliance issues. No, nowadays compliance functions are not just a single department. They are every department in the bank has some form of compliance exposure and compliance procedures that it should be using. Internal audit in banks. So to give you an example of how internal audit was thought of, I can give you a manifest example. There was one bank with 25,000 employees, and 4 members of the bank were the internal audit team for that bank. And I can tell you that happens in Russia, that happens in Australia, that happens in the US, that happens in England, etc. What's wrong with this? Internal audit is a third line of defense, and without that third line of defense, I can guarantee you as a board, you will suffer from either non-compliance fines or capital add-ons. Internal audit is a very, very powerful and very necessary function, and any system you buy should include something about internal audit. Banks using spreadsheets. I mentioned you this before, so I won't continue about it. You already know, I've told you. What's interesting about trends? In 2020, 85% of the firms that were interviewed by Thomson Reuters and other such information gatherers were looking at seriously acquiring Regtech solutions. It's very interesting. What were they looking at? Which is more interesting, I think. They weren't looking at transaction monitoring or onboarding of customers. In other words, they weren't looking at revenue gathering Regtech types. They were not looking at revenue gathering Regtech types. They were rather looking at revenue mitigation by looking at compliance monitoring types of Regtech first. So their ranking was compliance monitoring, then financial crimes, and then onboarding of customers, which is very interesting. Last but not least, 72% of firms globally see a growing urgency towards buying and investing in specialized compliance, risk and compliance technology for their organizations. So what those 8 gaps have led to is the Saudi G20 presidency around the SAMA and the BIS and the Financial Stability Board in a very foresighted manner, coming up with a technology challenge to the world. They issued an initiative called the Tech Sprint, and this Tech Sprint has identified 3 major gaps in the industry. What they call dynamic information sharing, regulatory reporting, and monitoring. Dynamic information sharing, just very quickly, it's about sharing information between the regulator and the bank in real time, rather than using a month, say for instance September, where you send your ICAP into a regulator to be reviewed, or your ILAP. Now you will send information in on a monthly basis. Regulatory reporting is where you are now able to send your reports in a regulatory, in a e-manner, and those reports also, what's very important about it, allows you as the bank and as the central bank to have a searchable database, and it's linked to the regulations. That's very important. Monitoring and surveillance is even more important, I think. This is where there's real-time monitoring, just like Mr. Javed mentioned earlier on, where you're talking about now there's a real-time monitoring and surveillance of the industry. They call it real-time, in other words, instantaneous way of looking at how regulations are affecting the industry and how banks are complying. It's very interesting to see that in monitoring and surveillance, what you also find is that regulators are able to use that to develop regulation in real time. And an example of that is pandemic risk for COVID-19. Okay, that is already being published by APRA in Australia, and I'm sure it will be in other countries too. So if you look at across the world, global regulators, if you look at things like US, Australia, Russia, what you see is this pronouncements taking place by those central banks who are part of the G20. So for example, if you look at SAMA, the governor of SAMA recently in February this year announced that the kingdom is moving towards becoming a fintech leader in innovation, not only in the region, but also across the world. That's very encouraging. And I think that's exactly the forward thinking. That is why SAMA is one of the best central banks in the world. If you look at major global regulators and what directives they issue, if you look at certain central banks now, they are issuing mandates to banks that they must invest in technology, okay? And that technology is why, that investment is why, it's because what's happening is the central bank is wanting to keep a technology parity between itself and its constituent banks. It's very important. Second thing that you can see is that supervisors want to introduce technology because it helps them become agile and to mitigate against things like COVID-19. It's very important. As Mr. Javed mentioned, and I'll just repeat here, so by April of this year, in the SAMA sandbox, the SAMA, true to their word, have issued already 9 new fintech companies with licenses to operate in that sandbox and to test the product out on the market, which again, it's encouraging the industry to become more technologically focused. Interestingly, why has this happened? This has happened because, as I mentioned before, regulations throughout the world are set to increase. They're not going to decrease. So just give you a very good example of regulations alerts globally. So in 2016, which is very interesting, globally across the world, there were 52,506 regulatory alerts. How about that? Okay. That equated to almost 201 daily regulatory alerts across the world for 750 of the central banks across the world. Between 2008 and 2016, there were 2,500 regulatory compliance books created. Okay, and what does that mean for the market? It means that the inundation of regulations is such that it's humanly impossible for a compliance department or for a bank to first manage the sleuth of regulations that are there, and second of all, for the bank itself to link those regulations internally and help it to become compliant. For the supervisor, you can manifestly see the issue in that how can a supervisor now, with its limited resources in terms of its supervisory teams, be able to keep abreast of overseeing those regulations in the market? What's this led to in the industry is trends where, because fines are not necessarily working or capital add-ons are not necessarily working, now you see supervisors becoming more aggressive and issuing and making executives liable for breaches. This is leading to trends in the market, which, as again was mentioned in the speech before this, but I think it's insightful to say this. You see that Regtech firms, and I'm talking about small startup firms just like ourselves, are going into development of regulations. So development of technology. Across the world today, startups are investing over $5 billion, and that's just in 1 year, by the way. That's not cumulatively. That's just in 1 year. They are investing $5 billion in the development of technology. If you look across the world, in 2022, there's a forecast that banks will spend, or central banks will spend, at least $76 billion in 1 year in acquiring technology. If you look at the same forecast in 2022, you will see that banks' operational expenditure on compliance and on technology acquisitions will be almost 34% of their operational expenditure for that year. It's very interesting. Why is this? Well, central banks who have introduced technology have found that technology, supervisory technology, increases stability of compliance in their industry, increases the industry's stability and leads to banks becoming more compliant. So it has a stabilizing factor. The second of all, e-supervision allows for effective compliance, where regulators are now more productive and efficient. Compliance reviews by central banks are more efficient. What boards of the banks have realized is that Regtech is giving them more confidence and a richer information for presentations for compliance reporting. What you find that Regtech in banks, if you speak to any bank that has got Regtech, it will tell you undoubtedly that that has led to an increase in the compliance skill sets of its people. And last but not least, you find that because Regtech has been implemented by certain banks, what you'll find is that they are now able to use compliance in a capital optimization strategy, where it never used to be one. So in other words, to reduce the CAR, it's looking effectively at how it uses compliance. So in the world today, what are the solutions that can help you to achieve these goals? There are 362 Regtech firms which were surveyed by Deloitte. There's a Deloitte website which you can visit with this link. There's 362 and they spread across compliance through to transaction monitoring. What is interesting about this, first of all, that there's no SupTech within this regulatory universe, which is very interesting. There's no heading to that effect. And then goes on to the systems themselves. Now, horses for courses. As I've mentioned to you about the compliance criteria or the Regtech criteria or the supervisory the criteria you use when you're building your systems, you'll find that most of these systems are generic. They can be used in nearly any industry. The second thing is you'll notice that most of them don't have direct linkage to regulatory requirements, especially if they're not inside the financial services industry. Another important issue is that most do not look at ICAP, ILAP, governance risk management, or capital management in the form of prudential regulatory requirements. They might look at them as, if you want, procedural calculations, for instance, economic capital for ICAP or LCR liquidity coverage ratio for ILAP, but they don't have a direct linkage to frameworks or to regulatory requirements. This is where it's very important that you buy a system or you have a system that does that. Again, in these systems, you'll find most don't provide you with the reporting mechanism or framework to allow you to present your documents and your processes against the regulatory requirements in such a way that you present the regulator with a book of your compliance journey in a very structured way, the way that regulator looks at your bank, which is using the regulations. And last but not least on this, most of these systems don't help you build up a compliance topography or compliance journey as you go from year dot to your current year. So you want to be able to do that. These systems that you look at, these 362, can be subdivided into three main areas. Business process facilitation, which is helping the bank to achieve a compliance process, which is, for instance, anti-money laundering or know your customers or counter-terrorism financing. There's another one which I alluded to earlier on, it's data capture analysis, which is basically, like I told you, about the op-risk data capture or about economic model calculations, etc. And the last but not least is they are dumb forms. These are pre-formatted forms, which are using basically cells, capturing data from other areas in your bank and allowing them to be presented, which you then give to the regulator. Those are the three kinds of software that are available on the market. And certainly you want to be careful when you're purchasing a system, that your system, again, talks about the regulations in some way or another. So I will now hand over the floor to my esteemed colleague, Mr. Alexey Lobanov from the Central Bank of Russia, and he will talk to you more about the e-supervision strategy and about its conclusions and how what they implemented in their country. Thank you very much, Alexey.
Dear colleagues, good afternoon and greetings from Moscow. In 2011, the Bank of Russia published its first recommendations for banks on ICAP, but the legal ground for enforcing compliance with these recommendations was still missing. In 2014, the banking law was at last amended, and we could proceed with implementing ICAP as mandatory minimum requirements reinforced by Supervisory Review and Evaluation Process, or SREP. In the following year, the final rules on ICAP were published and came into force, together with the first SREP regulations that included a methodology based on 25 high-level questions and scoring criteria. This was enough to successfully pass the Regulatory Consistency Assessment Program initiated by the Basel Committee in 2015, but obviously not enough to learn what was going on about risk and capital management at more than 800 Russian banks at that time. Therefore, it was time to think of a high-tech supervision strategy that included a tailor-made, state-of-the-art toolkit and software for our supervisors that would both educate them in risk and capital management and help them make sound judgments about ICAP at banks. Nowadays, this would probably be called SupTech or e-supervision. Due to lack of appropriately skilled personnel, we decided that SREP would start as an entirely remote or off-site procedure based on self-assessment done by banks and then verified by supervisors. We would like to get a kind of SupTech solution developed by an experienced consultant that would embody best practice accumulated across jurisdictions where SREP and ICAP had long been already in use by that time. What we needed first was a methodology of a comprehensive SREP analysis and assessment system that could be implemented into software. In 2016, we announced an open contest for a consulting project in SREP. The proposal included a compliance methodology, the underlying compliance guidance, reporting, scoring, and benchmarking functionality. The contest was won by Zeyn's company because it was by far superior and more advanced than those submitted by several global consulting firms. It took us less than a year to develop and deliver this SREP methodology, which was implemented into the software. We conducted a pilot project using 2 of the largest Russian banks to test the methodology. At the end, we organized a 2-week-long training course in SREP that was designed and conducted by Zeyn for more than 200 supervisors. The SREP methodology included more than 650 detailed closed-form questions mapped to all areas of ICAP, cross-check rules used to validate the answers, scoring algorithms, bank benchmarking analytics, and detailed supervisor manuals for assessing risk and capital management at banks. Over the course of the next 2 years, all this was implemented in the software by Zeyn's subcontractor, who was commissioned to develop a customized solution for the Bank of Russia. The software was tested and fully deployed in 2018, when it was used to conduct the first comprehensive SREP assessment for all Russian banks. So far, it has been the only tool used by bank supervisors in Russia for doing SREP on a standalone level. Our supervisors were first wary of doing SREP, as ICAP was a new domain for them. However, after the very first round of assessment, they found the system to be very helpful for collecting the data from banks and structuring their decision-making process. Indeed, our supervisors say that thanks to the automated data collection, SREP analysis, and assessment software, they got a wealth of new information and learned a lot about the real situation with risk and capital management at their banks. For many banks, ICAP was long a kind of window dressing, but our SREP approach made them change their attitude as they did their own self-check by answering the 650 plus questions. This meant, for example, revising and updating their internal governance, risk, capital, stress testing, and other policies, documentation, reallocating powers and responsibilities in the process of managing their risks and capital, and even realizing their true risk profile. We believe that this exercise helped to bring the risk management culture in Russian banks to a new level and to supervise the banks more effectively and efficiently. After the first cycle of SREP 2 years ago, the bank supervision team got a unique opportunity to get a comprehensive assessment of all banks along risk and capital dimensions. After this one-off effort, subsequent cycles of SREP are less time-consuming for both the sides, as only answers to some questions need to be updated. This software has allowed us to focus on banks or specific areas in banks that are problematic and require active compliance management. We believe that Zeyn's software has improved the compliance quality in the industry. This system has proven its versatility and value in collecting structured, well-organized, and current data from banks. The approach to SREP proposed and implemented for banks on a standalone level was later adopted also for banking groups on a consolidated level. This is all from my side. Thank you for your attention, and now I'm turning the floor back to Zeyn.
Thank you very much, Alexey, for your kind words. Just to mention on the presentation, before I continue, for slide 7, which is about the e-supervision strategy, that slide, it's an abridged slide. There are a lot more information about that and about the development of the e-supervision strategy. And I will share that information with Mr. Javed, who can then pass that on to the relevant people inside the SAMA, etc., for them to review and use. But needless to say, it will help you. So how is ICAP or ILAP scored using a supervisory tool or a e-supervision tool? And here it is. We start off with a process of looking at 2 aspects of the bank. One is the quantitative assessment or of the prudential submissions that the bank has been issuing over the year. So you're looking at the capital adequacy numbers produced and provided to the central bank annually. And you look at, secondly, the ILAP or the liquidity submissions that the bank is submitting on an annual basis. This is a very easy exercise to do. It's very binary, and you come up with your solution about your quantitative assessment in a very, very quick process. The qualitative assessment is much more difficult, much more onerous, much more painstaking, and this is where we focus our attention on. What happens in the qualitative assessment is you are looking at the frameworks, the procedures, the governance, etc. of the bank, and you are giving it a qualitative assessment, but now you are using a very objective, very, very structured way of looking at compliance for a bank. These 2 assessments, the qualitative and quantitative, eventually meet each other in a bimetric scoring method that I will show you in a few minutes. So for the qualitative assessment, you're looking at certain areas of the bank, and you are asking the bank, as Alexey alluded to, number of questions on each of the areas of the bank. So this is not something that should be filled in by one department of the bank. This should be filled in by various departments in the bank who are in charge of those regulations. For example, risk management shouldn't be filled in by the compliance team. It should be filled in by risk management. Capital management shouldn't be filled in by the compliance team. It should be filled in by the finance department or whoever's managing capital. Same goes for ILAP. It shouldn't be done by the compliance team. It should be done by treasury or whoever does liquidity management in your organization. Same thing with internal audit, etc., etc. These come up with a scoring mechanism. I'm only using an example here, and I'm not giving you the underlying methodology, which is actually proprietary to a central bank. But needless to say, if you are managing this in the correct way as a bank, and you're answering the questions in the correct way, and you're using the methodology, the guidance in the correct way, you should have no problem in complying with what the central bank would be sending you. These scores give you a qualitative score for your bank across these areas. Across the quantitative scoring mechanism, using those prudential ratios that were provided, the central bank is looking at your, if you want, your gap between your risk appetite and what you are actually operating at, and that's what would give you grade 1. So the further you are away from your risk appetite in terms of the lower, the better you're going to score. And not only that, same with your capital management. If you are considering capital management in your strategic business development plan, same with risk management, if you've got good buffers in place, etc., you're going to score a grade 1. If you're not, you're going to score a grade 5. So it's not as simple as it looks. Again, if the central bank would like, we have a very detailed approach to exactly what goes into a grade 1, 2, 3, 4, or 5. And indeed, this Central Bank of Russia uses that inside its mechanism. This, as I told you, leads to a bimatrix scoring table. As you can see in the bottom of the slide, you can see the qualitative assessment being A to D, and the quantitative grades 1 to 5. Those meet each other on a mapping table, which is, again, all automated. This is automated, and it leads to a scoring result that you can see at the top. What's that scoring result? For the poor banks, you're getting a mapping of a D5, for example, which is on a plus 3% to your capital add-on or more, depending, and that's where there is some subjectivity coming in after 3%, depending on which areas that you are deficient in. And that is also within the system as to a weighting of which areas are most important to that bank in terms of the risk exposure of that bank. And that's called business model. On from that, what's important about that exercise is benchmarking analysis. This allows the central bank to place onto a quadrant the scoring of that bank against these procedures here in a benchmarking exercise. It allows the central bank to see what bank F has done right. I'm saying F for Foxtrot against what bank Z for Zebra has done. And what happens in the system is by clicking on F or clicking on Z, you can see a drill down of exactly how that bank has scored in different topics, compliance topics, and even in some cases in different departments. Okay, this is invaluable. It leads to you as a central bank being able to produce a gap report for Bank Z in a very specific and a very focused way. Okay, and not only that, it allows you to map the journey of Bank Z from D coming into quadrant A. This is very important. So a little bit about our system specifically. Our system includes all prudential regulations that are available on the market today. We also include, beyond the one that you see there at the bottom, Basel III. We also will include, as it comes out and becomes published, Islamic banking, IFSB 17. And we have already gotten the system pandemic risk management, or if you want, stress testing for COVID-19. This we got from the regulations that we've taken from APRA, but I have no doubt in my mind that those regulations will now permeate the rest of the world as COVID-19 becomes something of a regulatory concern for the regulator. The nice thing about this system is that we take the regulations, decompose them sentence by sentence, which I'll show you on the next slide. But what's important about this is that this system is updated every single time a new regulation comes out. So every time a new regulation is published, we update your system for you with the following items. And I'm going to show that to you on the next page. So when we introduce what happens in the system, it decomposes, say, for instance, Summer's requirements for ICAP or Summer's requirements for ILAP. And against those regulations, it provides the user with a compliance guidance. That compliance guidance allows the user to understand, A, what that means, that regulation means, B, how to comply with it, and C, what to expect from the regulator when the regulator starts asking you questions about your compliance. Very important. So this is how the system works. Inside the system, we have a thing called reporting. What's reporting? It's all your historical archived compliance reports set up by the system in the structured way to allow you to use your historical progress to come to year 2020. This is how it works. It also includes, in that snapshot of that report, the documentation that you produced internally, the frameworks, the risk management framework, the capital management framework, the governance framework that were produced in 2019 against those regulations. So you understand what, as Alexey was alluding to, what happened in 2019 and how and what you need to change specifically for 2020. The next part of it is the departments and compliance validation. Again, like I told you before, compliance should no longer just be the compliance department. So what we've done in the system is allowed the different regulations to be mapped to the different departments of the organization. And that means that now finance is in charge of capital management, etc., etc., as I mentioned before. Compliance validation is used by the director of the department or by the bank, the board of the bank, to validate that what the bank has put into it is compliant and can be released to, the regulator. The risk requirements, we have various modules in the system. These modules go from all the regulated risk types, from credit risk down to counterparty risk, okay? And we will include others as they become available. So you will see on the menu in a few months' time, pandemic risk, okay? What we have is all those risk types available. What we do inside those is we ask you specific questions around the regulations pertaining to that risk type. So this is also a very good system for companies like CMA licensed entities who want to produce their ICAP or who have produced their ICAP and want to see how that ICAP is working, or that liquidity management process if you were a CMA licensed entity, or an ILAP for a bank for SAMA licensed entity. So this system can be used by any size of bank, no matter what. And the system then becomes customized to the comparable size of the bank and its business lines. So this is a very appropriate tool for those purposes. The system, what is interesting about evolution, and like we tell you, and we're going to show you, this system has evolved. So as you heard Mr. Lobanov, Alexey mentioned early on, that the central bank system, the Central Bank of Russia system, has 650 questions. The system that we now have, because of pandemic risk, because of additional focus on cyber risk, additional questions coming out on market risk, additional questions coming out on additional topics coming out, compliance topics coming out on operational risk. The system has changed from 650 questions to 1,010. Okay, so the system is living and breathing. It's not a standard. It's not a system that you buy and we forget you. We can't, because we have got that obligation to both legally, contractually, and if you want to say, this is our passion. So our system will progress as the regulations do. Those questions that we ask you also come out with guidance against them on how to comply. So you're not left at sea when it comes to answering that question. There's 1,004 1,004 detailed questions, or 1,010 detailed questions, I apologize. And there's a summary question sheet. What's a summary question sheet? The summary question sheet is what you would produce your annual summer ICAP against. There are a set of 48 questions, I repeat, 48 questions for the summary questions, and those are what you would produce on an annual basis, not the 1,010, but the 48. Those 48 are what you would comply with every year and produce that report which is in exactly the summer ordered fashion for you to produce your ICAP or your ILAP report. So again, for CMAs, this is a very, very important and very useful mechanism, especially, okay? For banks, what's useful, I think, is more importantly, the 1010 questions, which helps you to look at compliance in a very structured, very organized, very methodical manner, and then to link those to your answers that you will have in your summary questions. Next, we have a thing called document library. So as you answer your questions, whether it be summary questions or detailed questions, the system asks you to attach documents inside that you are using internally to support that process. So for example, I have a capital management procedure in my bank. Okay, against that, you should have a capital management framework. And against that framework, you should say that I'm following our business strategy. So you should be able to put your capital management framework in and your business strategy. Those follow that regulation and your answer to that specific regulation, which then you provide to SAMA. And so SAMA see a complete broad spectrum and at some level a detailed spectrum of how you have a capital management framework in place, how it links to your business strategy, and how are you using the two in conjunction with each other. That's what document library is. The document library allows you as also the user to see year on year the different versions of documents that you used in 2019 to the ones you're going to use in 2020, and helps you to progress your capital management framework, your risk management framework, your governance framework, your stress testing framework, etc., etc. ICAP Messenger, you saw what we said there about monitoring and surveillance. So to show that we are, well, the system so far, if you look at the G23 requirements, you will see that we already map to those 3 requirements. And that's why we didn't partake in the G20 tech sprint, for the reason that some of the items that we have in our software are, have got patent pending, patent application pending. And for us to go and implement, to apply to the tech sprint would mean that we would lose those patent applications. So we don't participate in the tech sprint application. Inside our system, we have ICAP Messenger, which can be used either by the bank internally to discuss matters, compliance matters, and it allows you to attach anything in the tool, okay? But it becomes a self-contained messaging system within the tool. You can also use that if the regulator becomes e-supervised and, how can I say, technologized, it will allow you as the bank to talk with the regulator directly using the system.
Zeyn,
sure.
Sorry to interrupt, but we just crossed 1 hour mark.
Okay.
Just wanted to let you know. Thank you.
Thank you very much. So in actual fact, this is the second to the last slide. So this slide, like I told you about risk appetite metric of compliance, there it is in a nutshell in that pie chart. This allows you now to see compliance in a very specific way by either the bank or by the regulator. Allows you to drill down onto those segments and allows you to see the different areas of the bank which are non-compliant, either by topic or by department. Last but not least, the system has done quantitative compliance forms, quantitative compliance form, which allow you to submit your ratios. So onto my conclusions and next steps. We've talked about the benefits, and I'm not going to go into the slide anymore. It will be on the recording. But basically, this benefits both SAMA and it would benefit the banks in terms of compliance. And you heard testimony, or you heard what Alexey Lobanov said earlier on. We, as RISKCAPCOM and Carlyle Square, by the way, are offering a free pilot of the software for a period of 15 days. We offer this no charge. It will take a maximum of 2 people in your organization to run through the pilot. We will be using the summary questions only. It will produce at the end of it a very, very valuable ICAP report, which I can tell you costs most of the banks, or if someone was to do this, in the region of $200,000 to produce the same report. And I can tell you from the 15 working days, I know for a fact that no bank would ever be able to produce an ICAP report in this amount of time. So we are offering a free pilot. Please contact Mr. Javed by the end of this, at the end of this presentation, and he will start the process of how this will work and what the results will look like. I thank you for the time taken on this webinar. I thank you to Mr. Mansoor Osmani and to Mr. Tariq Javed and to Mr. Alexey Lobanov for their inputs and for their time taken. And to the audience, I appreciate your time. Thank you very much.
Thank you, Zeyn. Thanks a lot to our presenters.